Good evening, traders. It is Sunday, February 23rd, and this is a special edition. Typically, I don't do videos on Sunday night, but I did promise you that I would follow up on my other swing trading video because we abandoned all of our bullish and bearish spreads this week. We didn't want to put them on. I didn't like what I was seeing in the market, so I wanted to justify my rationale for that. And it's a good thing that we did that because it looks like we're going to have a little bit of weakness come Monday morning. The futures right now are down almost 40 points overnight. So the indication for Monday morning is pretty dang weak. So let's take a look and see what happened back in here that raised the warning signs. I'm going to go into a 5-minute chart on the S&P 500 and I'm going to scroll back. So the first chance that we've got to do any of the trades on the video from Wednesday night is Thursday morning. There's the open on Thursday. Everything looks good. The market opens lower. It grinds higher. This is very typical. This is what we've seen. Down open, market grinds higher the rest of the day. Except that when we made that high, we had two long red candles here, and I referenced that in the chat room, and I said that was a pretty good smackdown. I'm going to be looking for a double top lower high in here, which is exactly what we had. My 1OP indicator was cresting and it was rolling over pretty hard. We had this upward sloping trend line that was breached. We also had a sell signal on the system right there. So I had all the reasons that I needed to be bearish. So I bought puts up here. We made 100% on it in the chat room. Fantastic, wonderful. That's a day trade though. Swing trading is what I'm talking about. And in fact, this version of Option Stalker that I'm running tonight that I'm going to show you is going to be called Option Stalker. I'll have two versions, Option Stalker and Option Stalker Pro. The difference between the two will be that Option Stalker Pro includes the chat room, and that's not really something that swing traders need because those trades are really geared towards very, very short-term momentum plays intraday. I've also taken out some of the time frames on custom search, which we're going to use to find some bearish trades in a few minutes. And I've also taken out a few of the searches that you would be able to use in the scanner that are really day trade searches. So apart from that, everything else in Option Stalker is the same, but the price will be dramatically reduced for Option Stalker versus Option Stalker Pro. In fact, half the price. So you'll be able to use this incredible search tool. But let's get back to the market and do a little bit of analysis here. So we can see that we've got a tight compression up here, lots of dojis, equilibrium, and then we have this nasty sell-off on Thursday, which did recover. But that type of selling that we saw there is a big warning sign. And so in Option Stalker, I post bulletins. It's a giant pop-up just like this. You cannot miss it. So if you have it running, and you can see here, February 20th at 11 o'clock, this is Eastern time, about an hour and a half after the open, hold off on your bullish put spreads. I also post 20 minutes later, if you have bullish put spreads on that are winners, buy them back and buy some VXX for protection in here. This selling is hardy and it can build quickly. So those pop-up alerts are given. Even though I'm doing play-by-play analysis in the chat room for my day traders, I am also still trying to update swing traders in the platform as well. So if you came in, hey, I work all day. How am I supposed to adjust my positions? If you came in and you turned your computer on Thursday night and you saw that message, then you should know, hey, we're holding off on bullish put spreads. I got 2 of them filled today. I need to get out of those things Friday morning. If you'd have done that, you would have taken some losses on Facebook. You would have taken some losses on Disney. But folks, we've been on a 6-month tear where we have had 8 winners in a row every week for the last couple of weeks. We've had 4 out of 4, 5 out of 5, 6 out of 6 winners. I mean, we've gotten this whole thing in here. And I've been saying, I don't want to give any of this money back. We've worked so hard for all of this. We've had a fantastic run. We know that coronavirus is being discounted by the market. We had a warning from Apple last week, and they said, hey, you know what? This coronavirus, it's going to hurt our earnings pretty considerably. And we've had all sorts of supply shortages. So Apple, let's take a look at that. And if you see a warning like that from a company, you can see how Apple came out. I believe it was Tuesday. It rallied back, no problem. But Friday, it looked really weak. And that is a short that I showed in my day trading video that I posted on Friday. So you can go back and watch that. There's another stock that we also found. So right now, am I super worried that the market is going to have an absolute meltdown? No, not particularly, but I do feel that coronavirus is going to be an issue. Imagine that if in the month of December, when retailers in the US are going absolutely gangbuster and they do probably 30% of their sales in that 1 month period. Imagine if the whole country were shut down, or at least 2/3 of it. Well, that's what happened in China during the Chinese Lunar New Year. So this is going to have a devastating impact on their economic growth in Q1. And it will have a ripple effect on any company that's doing business in China. The market has said, well, yeah, you know what? Low interest rate environment. We don't have really good investment alternatives. We're going to ride this storm out. Well, you've got bullish speculators on moves like this. Nice, tight trading channel higher are loaded up and they will get flushed out. And when they get flushed out, you start to see some heavy selling because they hit the exits at the same time. Sell programs kick in, margin requirements start coming into play, and you get these big waterfall events. One big red candle, two big red candles. If I were able to go back earlier last year, you can remember some of those big sell offs that we had like that. Boom, boom, boom. Just like that. Well, I hate to say it, but we could see something like that, and it may not last more than 4 or 5 days, but there's going to be some serious pain involved if this happens. We want to be on the sidelines in cash, waiting for that market to come in because as soon as I identify support, and I'll be looking for a bullish hammer similar to that, but we'll probably need a few of those before we actually hit a bottom. If we get a big sell off, we're first going to test the 330 level, which that is support on the SPY. I've mentioned that before, so 330 is right in here. Let's do this. Let's draw an alert line. We're going to click this, and we're going to click this. So you can see that comes in right around the 327 level. 327.50 is where I see the next support. So first support, 330. Next support, 327.50. Below that, we've almost got to go down to about the 315 level with the 100-day moving average, and you can see this horizontal breakout right there. That would be really good support at 315. Do we get below that? Gosh, I don't think so. But we've got the 200-day moving average all the way down here about the 305 level. And so if I looked at this low right here and this high right here, it is about 40 points. And I could actually take 40 points off right here. And it does actually put me down on that 200-day moving average. So is it possible? Yes. I don't know how fast and furious the selling is going to be. When I get really nice, tight price action like this on the upside, I know that the best trade that we can do is going to come on the long side. So, Pete, why aren't you buying puts? Why aren't we loading up on puts? There's going to be a ton of money made on puts. Well, we had this nice upward sloping trend line right here and this gap lower. Hey, here we go. Finally, buy some puts. Oh, yeah, nice little rally. Load up. Yeah, buy some more. Look at this snapback rally. Boom, boom, boom. It has been super tough to buy puts. And I'll tell you that on a longer term basis, we don't have any credit issues right now. And that is super, 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 super important. There will not be a sustained market decline without credit issues. And I don't see any right now. And I monitor them very closely. So, what are the other driving forces? The main one is that central banks are lowering interest rates. They're at historic lows. Bond yields do not keep pace with inflation. So, if you're invested in bonds, you're losing money every year because inflation is outpacing it. So, who wants to be in bonds? Who wants to be in fixed income? When you hear about the Fed providing a safety net, that's what they're talking about. Investors are in stocks and they're forced to go out on the risk curve into equities because they can't generate any decent returns anywhere else. Our economies are doing well, so that's not a problem. The other thing is that corporations are taking advantage of low interest rate environments as well. They're issuing a ton of debt. Well, what are they using the debt for? Are they using it to spend money on plant and equipment and expand operations? In some cases, mainly they're using it to buy back shares. So when they're buying back shares, there's a natural bid to the market. The other thing is that there are fewer shares available for people to buy. So that just automatically means that supply is constricted, demand is constant, the price goes up. This has been such a powerful force. I believe that in the last 10 years, the number of outstanding shares has declined by 50%. That is a huge number if you think about it. So, that is a powerful force that's still intact. We do not have a credit crisis, but if you are a short term trader, there are going to be some opportunities on the short side. I personally will be day trading those opportunities. I do not plan on holding a lot of overnight shorts or bearish positions because I know that I want to maintain my focus on the buy side and that my biggest opportunity is going to come when the market comes in and it sets that low and I see a capitulation low. Blam! I am going to be buying calls. I'm going to be selling put spreads like nobody's business. And I'm not going to be focused on, oh gosh, all my longs are losing money. How am I going to adjust my risk on those? I'll tell you another thing is that when these market drops come, I tell everyone the first thing you should do is reduce your exposure. Do not hedge. Take some of your longs off. If you have stocks, take some of your stock positions off. It's easy to do. Hedges don't always perform the way that they're supposed to. And it's much easier to have a bunch of cash sitting on the sidelines than it is to have a hedge that may not be working properly for you. So if you had a bunch of bullish put spreads out there, which if you've been following my advice, you sure don't. We've only got two bullish put spreads on right now, and we're long VXX. So tomorrow morning, yeah, we're going to lose some money on our bullish put spreads, but our VXX is going to more than offset that, which, by the way, we have a finite amount of risk on our bullish put spreads, but VXX can shoot much higher, and we can actually make money with that combination. So you should not have a lot of bullish put spreads on, but if you did, now you've got 5 or 10 different positions on and you need immediate protection. Yeah, then you definitely want to buy some SPY puts immediately. You'd want to buy some VXX if you had a lot of exposure. You got to hedge that position in that manner. Otherwise, though, you want to be buying them back, just like I was saying on Thursday. Hey, if you got some spreads expiring on February 21st on Friday and they're trading for pennies, reel them in. Don't risk it. We've had such a good run. It's not worth it trying to milk the last couple of pennies out of this. We want to go to cash. So let's say that you've done all that, everything's fine, and you come in over the weekend and you say, hey, you know what? I think that the market is going to head lower. Oh, I'm looking at the futures. They're down 40 points overnight. Let's see if I can find a bearish trade or two. So what we're going to do, I'm going to show you how easy this is. And these trades are going to be valid for Monday morning. And then I'll finally, I'm going to just end this video with what you need to be looking for Monday morning. When would you want to take bearish positions? And when would you want to hold off? And just keep in mind, I am not trading the short side of this market. Excuse me, I don't care if the S&P futures go down 300 points from here. I'm not going to be participating in any big way. I will be doing that intraday and I will do just fine, thank you, intraday. But on a swing basis, for most of you who are working professionals, you have to be too dang nimble to take advantage of short positions, even on an overnight basis. Because when these violent snapback rallies happen, they will be fast and they will be furious, and it will be super hard for you to make money. But you can make money by being patient and by waiting for that capitulation low, that intraday reversal, and then selling bullish put spreads or buying some calls on really strong stocks. Then you'll be able to let that rally ride for a little while, and it should be able to last 3 or 4 or 5 days where you don't have to worry about it very much. So I hope all of this is starting to gel and make sense. Make sure to watch my daily videos because I'll be giving you updates constantly. So here's one of the changes that you'll see in Option Stalker. We don't have the 5-minute, 15-minute, 30-minute, and 1-hour time frames to use for our searches, but I've got the 2-hour, 4-hour, and daily. This is really all we need for option trading. You're going to go in, make sure that we've got liquid options. I like to use a rating of 3 or higher, and we're going to go in and take a look for a sell signal on a 2-hour, 4-hour, and daily basis. I'd like to see a stock with relative weakness. Same thing, multiple time frames, and let's see what we come up with. I could knock through this list in no more than 10 minutes, and I could do every single stock on here easily. Just be looking for very specific patterns if I wanted to. Yes, I'd like a stock that's below the prior day's low. That would be nice. I can even show me a stock that had heavy volume on Friday. And we could really whittle that list down. Now, this would take you 3 minutes to go through. Wouldn't take you long at all. So, I do see QQQ on there, which is interesting also. So we're going to take heavy volume off. And I could also look for a stock that's breached the 20-day upward sloping trend line. Okay, so I'm looking for a breach. I'm looking for a bearish breach. Nice little list of stocks to work with. So let's go in and take a look at some of these stocks. I'm going to take that off because I want to give you a bigger list, not a smaller list to look at. And then we'll take a look and see what we've got, and I'll show you some really good picks. We'll knock through these pretty quickly, I think. So I'm going to move that off screen so that we can see the entire chart. And the first one on the list is Apple. I showed you this Friday. And you can see here the 1 OSI indicator I'm going to keep up. You can see how it has relative weakness. That is not good. You can see how Apple here is starting to break this horizontal support level at 313. I think that Apple is going to take some heat, especially since it has warned and it has already indicated that it has supply shortages. I believe the Apple store was closed and they had, I believe, 20% less sales in their Apple stores. You'd have to read and check the numbers. I don't do a lot of fundamental analysis. I watch price, but I think Apple's going to be a decent short. I'm just going to go through Abbott. I think it's got some work to do below here, this $87 support level, maybe. Adobe, really big runner up. You've got this upward sloping trend line, very steep. I can't say Adobe would be a favorite, so I'm just going to wait until I see something I like. All of these would be good candidates, but I'm looking for something that you're going to be able to latch onto come Monday morning. I'm just clicking through. Amazon's had a nice run. Looking for that stock. Now this is interesting because that's a failed breakout, so this is some pretty heavy selling in here. But I'm just going to go through. I just want to find a few for you. Now this is actually a pretty nice chart here. This is Boeing. You can see how the stock has rallied up, hit the 100-day moving average, couldn't get through it, long tails above body. Even before the market's selling off, it's starting to have some weakness. Got relative weakness there. You've got it challenging this upward sloping trend line. Boeing might be okay. Alibaba, you can see a downward sloping trend line here, series of lower highs. You have an upward sloping trend line here that's been violated. Yeah, I think Alibaba will probably work well on the short side. Still not my fave though. I'm going to find something in here that I like even better. DVN, got a little bit of a bounce. 100-day moving average does not hold. This is an energy stock. You can see it taking out the low there. I think DVN probably works. GE, starting to get into this gap here. It loved the earnings. Now it's starting to back off. We actually played GE on that. So the bullish put spread did really well. But now that the market's starting to soften, I believe this 1225.50 level, if that 1250 level, if that fails, then I think that that may make a pretty decent one. Still don't have that. This is pretty nice here. You can see GS has just not been able to get anything going here. A couple of long red candles. You've got a downward sloping trend line, and you're through horizontal support right here. And that was a previous breakout at the 234 level. I think Goldman Sachs could be a good one, but you've got this 100-day moving average in the way. So I want a cleaner path down than that. HLF. This is a pretty nice one, and I'll show you why. You've got your earnings after the close. Stock rallies up to the 200-day moving average. Looks fantastic, and it reverses the entire day. Lower on Thursday, lower on Friday, breaking horizontal support. I think HLF is going to be a really good short to play. You can see the relative weakness right there. You can see the heavy volume. So, number one, HLF I think works. I've already said I think that Apple is going to work, so we're going to put that on the list. Which, incidentally, when you've got Apple not performing well, it weighs on the entire market. Intel here, going to test that level right there, the 6360 level. If it comes in below that, yes, I think you could probably short Intel. Not a favorite, though. IQ, there's your breakout right there. The breakout fails even before Thursday. This stock is going to see some selling in here, and I think that is one that I would short. IQ, you've got this upward sloping trend line that comes in somewhere around the 2280 level. And let's take a look at the 5-minute and see what it did on Friday. You're looking for relative weakness, and this is all information that's available to you on a swing basis. You'll be able to see this orange line on an intraday chart using Option Stalker. And there you've got that downward sloping trend line there, a little bit of a bounce late in the day, but the market bounced. So yeah, I think IQ will work on the short side. I'm going to add that to the list. LVS is next on the list. You can see it was weak all day. Let's take a look at that daily chart. You can see how it's approaching the 100-day moving average. If these stocks that are close to a major moving average like this easily violate that 100-day moving average on Monday morning, yeah, I think it'll set up a good short because there'll be a lot of people searching for stocks that are below the 100-day moving average. And when it comes up, then it will be a self-fulfilling prophecy. You'll have more traders shorting it as well. So I think LVS, plus they've got a lot of properties in Macau. And this is, after all about coronavirus and the impact. Morgan Stanley weak. They're buying E-Trade. Microsoft, this is pretty weak. I've had Microsoft on my list since this almost bearish engulfing pattern. We were selling bearish call spreads on it, so it easily took out this support level right in here, made a little tiny effort to get back up to that all-time high, and it was smacked down hard. You can see heavy selling all day Friday. I think Microsoft is a good short. Does that mean I don't like Microsoft? No, I love all these stocks. They're great. That just right now they've run up too far, and when the market's pulling back, the stocks that have gone up the most are probably going to see the biggest losses initially, and they're going to retrace. So we're just going down the list. We're going to take a look at QQQ as well. QQQ, okay, we've got this upward really, this is what I call a parabolic wedge. You've got your upper trend line right in here. You've got your lower trend line right in here, and you can see that wedge pointing higher. That is a bearish formation, and I also pointed that out on the SPY2 members last week. This is a good short right here, RCL. That is a nice looking short. Really bearish price action, breaks out below this 100-day, or excuse me, below this horizontal support, backing off the 200-day moving average. Really nice. Roku, I showed you Friday. I like that short below the 200-day moving average. So already, here we are, just a few minutes into this research. This is bearish, but it's not going to make any big moves down here near support. But this is UAA, Under Armour. WDAY breaks this upward sloping trend line. Long red candles closing on their low below the 200-day moving average. Yep, I think this one's going to work come Monday morning with a market decline as well. WDC, it's got to get through this horizontal support around that $64 level. If it's able to do that, it's got nice room to run. So I don't know, how long did that take us? I had to do explanation as well. You could have knocked through this list easy in about 3 minutes. Click, 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 click. Take a look. You're going to find a bunch of really good stocks that you want to short. So out of the list, the ones that I really like, I think Microsoft is going to be an excellent short. And visible support 168 or so. I would not hang out in these stocks very long, quite honestly. If you do short them, you've got to be super, super, super careful. I don't like this strategy for swing traders. I do like it for day traders who are nimble, who can watch the market intraday, who can get the news. You never know. If coronavirus comes out, I've seen it 100 times where the Fed all of a sudden decides, yeah, we need to lower interest rates a quarter of a point or a half a point. And what they love doing is they wait for expiration Friday and they release that news before the open, and it really screws every short. So you don't want to be playing the bearish side. You want to be waiting with cash on the sidelines. This drop is going to set up a great opportunity. So the key really in trading has been to recognize that you needed to be careful and you needed to be in cash. Everybody always wants to have a position on. That's the biggest problem that traders make, is they've always got to have a position on, and all that hard-earned money that we've made for so many months, you're going to give a big chunk of it back if you weren't paying attention. So let's go back and take a look at some of the stocks that I like for a short. And we'll take a look at RCL. I really like that short. That's got a full head of steam here, backed off of those major moving averages, blew through horizontal support. I think that one works well. I think Roku works well as a short. That's below the 200-day moving average. It's had a steady downtrend here. Pretty choppy stock, though, as well. So try and short bounces. Try and buy your puts on a bounce. And I could go into that chart, but you'll know what I mean. Workday, I think that one sets up very nicely for a short also. You've got this upward sloping trend line that's been breached, long red candles closing on their low. You've got it below the 200-day moving average. I like that one. I think HLF sets up well. And you've got that breakdown below horizontal support and it backing off of those major moving averages. IQ I had showed you. And that one also, that's a failed breakout. So why does a failed breakout work? What's the big deal with that anyway? Well, here's what happens is you've got this nice run up. Stock gets a little bit ahead of itself, pulls back. Okay, buyers are willing. They're like, no, we like this stock. So they gobble it up, comes back up to this prior high. Now, when it breaks out like that, traders see it because it's making a new 52-week high. Say, buy, 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 buy. They gobble it up. Well, on the backside here, anybody that bought in here is going to be thinking, whoa, hey, this stock came all the way back to my entry price. I'm going to get out of this thing. I don't want to have it pull back on me. And so they start to exit and it feeds on itself. And the backside of these failed breakouts can get pretty ugly. So that's why I like trading those as well. That gives you a bunch of stocks that you can take a look at for Monday morning. Well, how will I know which one is the real deal? If you've watched enough of my videos by now, you should know that answer. So you bring up the 5-minute chart and you bring up IQ or you bring up RCL, you'll be wanting to see that orange line below zero. And put the buy sell signals up. You also want to be on a sell signal. So you want to have a sell signal and you want to have relative weakness. That's how you'll know that's the stock you want to be in. So like right here, where you've got a sell signal, or right here, you got a sell signal and you've got relative weakness. Okay, I want to be short in here. And as long as that orange line stays below zero, you know that you can continue to ride that trade on the short side. Now, if you're a very passive trader and you see a green arrow like this, you can cover and say, okay, I'm happy with my profits, but The green arrows are going to come, but it'll be much harder for this to get back above zero. And you can see how if you got out of the trade right here and you were chased out of it and you got back in it here, you'd be able to actually ride it down lower quite a bit further. So when you get both the red arrow and the line below zero, that's an excellent tool to use to tell you when to stay in the trade and when to take profits on it. And you can also do the same thing on the SPY, except you won't have relative strength or weakness because we are measuring the SPY with this indicator. But there's a nice sell signal. So yes, you'd have that on a sell signal and it would tell you to stay short that stock position. That's it for tonight. I'm going to be doing an update tomorrow. We'll recap very quickly the S&P 500 and I'll show you where I think those support levels are. Those will be key. 330, I believe, is where we will open tomorrow on the SPY. That is that low that we tested about 2 weeks ago. So we're going to test it again. 330 fails. I think that we start looking at support around that 327 level, which is this upward sloping trend line. We could find support there. That would be a pretty dramatic overnight drop somewhere in the 70-point level on the S&P 500. If the selling starts to accelerate over the course of the next week or two, and we got to get through this soft patch, we would look for that 100-day moving average at 315 to be a natural support level. And I'm going to tell you that when we hit that support, we're going to have a nasty big gap down, and then we're going to shoot higher the entire day. And we're going to close right on that high, and we're going to get this really, really bullish hammer that forms. And let me go back and see if I can find one from earlier in the year that would tell you the pattern that we're looking for on the buy side, like this, where you get this waterfall action. Market tanks, goes way low, and then it closes in the upper end of that range. But it'll be even more defined than that. But this is nice because the next day we jump higher and we have a long green candle closing on its high. So that confirmed that support right there. And then you're off to the races. And this is the type of pattern that we're going to be waiting for if you are a swing trader. So the move was not here. The move was getting long here. And look at all, so you're short. I have to spend some time on this because people just, they typically don't understand why you can't short the market and be nimble. Look at these big gaps in here on the downside. The market wanted to go higher. Long green candles. So, oh gosh, my puts, they look great. Oh, here, the market opened lower. Whoosh, it rushes back. Oh, here we go. Here we go. This is the big sell-off. Ah, now I'm in business. Short here. Oh, you're feeling pretty good here. 3 days later, what the heck happened? Oh my God, I got to get out of this thing. We could go right back to the high. So you get out of your position. Then you get more selling. Uh-oh, here we go. Oh, back in. Yeah, I need to be long puts. You come down here, your long puts, everything looks fantastic. And then the next day you turn your screen on and you get one of these. You do not want to be playing that game. I hope I save a lot of people a lot of money who are wanting to short this thing tomorrow that are swing traders. This market wants to go higher. You're going to take some pain on your long positions for a few days here, but in the next probably month or so, once the dust settles, we'll know what coronavirus means in terms of economic activity and how much it will mean to the bottom line for corporations. And when that dust settles, we're going to have a beautiful, beautiful buying opportunity. That's when you want to be buying with both hands as much as you can get. And that's when you want to leverage up. This is the trade that you should be waiting for. And then as a swing trader, when you get in here on this, then you've got nice, smooth sailing for weeks. So please take that advice. Good luck with your trading. Give this video a thumbs up if you like the content. Please subscribe to this YouTube channel and turn on your notifications. You never know when I'm going to post these videos. I had time. It was Sunday night. The futures are down big. I promised a follow-up video to my swing trading video. So I just thought, okay, I'm going to do one. I hope that you're able to watch this before Sunday and get some good trading ideas. Those shorts are for nimble traders who can watch the action intraday. I would watch for a deep sell-off early in the day. If the market is not able to hold that early support and spend an hour rallying and you see the next leg lower in about 20 minutes, then you know you're on the right side of that trade and we're going much lower. So I'll have that play-by-play commentary when I post my video tomorrow morning. Have a good night. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.